All right, guys, I just want to give another update to my Bitcoin position. I think this will be Bitcoin Trading Journal entry number 16. Um, today's date is April 5th. So here's kind of the take profits and the sell stop that I have set out on the lower time frames, kind of managing this position. I'll get down into the lower time frames a little bit later, but I typically like to start with the higher time frames and work my way down, just because my edge, tries to incorporate the big picture all the way down to the very small, even 5 minute chart. And one of the reasons for framing my bias towards the upside is the fact that the monthly just closed a higher low, um, confirming a higher low relative to this low. So we have a series of higher highs, high, both on a wick and closing basis, higher high, and both on a wick and closing basis, higher low. And then you really get your confirmation with uh, the trading above this monthly high and then closing above this high here. Or excuse me, closing above this close, so you get your low confirmed. And essentially that gives me a little bit of bias to consider this a longer term position trade. And if we go down to a weekly chart, there's a very clearly demarked invalidation level, I believe. Um, this last week's prior low. So that's actually the invalidation I'm using for a smaller time frame trade on top of my larger time frame trade. And so we can go down, work our way down to get there. But you can see I have a stop limit placed at this daily low. Again, that's last week's trading range, the low of last week's trading range. And we'll see this more clearly when we go to the 4 hour. See 4 hour come down to this level, gets reaction, and then there's your weekly low. Now, we can really zero in on the 15 minute and kind of see this level playing out. We have this level here. This is just a classic signature I like to trade. You see the price break. Well, first of all, it came down to a higher, point of release here at a little bit higher time frame relative to a 15 minute level, and then you see a reaction off there. Lower time frames start breaking structure. They run up into a price extension, retrace off the price extension back into this area, and then you get your impulsive move up to fill the inside gap up here, then run up to the point of release, come back down, retrace, fill this relative gap there, another pump up. But ultimately, this is the low I'm looking at, and we can see price came down to that level and offered a reaction. And and I have the low marked off here. Again, you could use this low set over on this end. Um, some people might like to put their stop a little bit lower than the weekly low over here, just to give price room to come down, take that level out. If there is a liquidity grab on that level, maybe they don't want their stop that close. But for me personally, I'm confident with this level being a good risk management area. You see, it was respected here. If price comes down and violates that level, it starts to violate my trade idea. And with that in mind, I want to be taking risk off my trade once my idea starts to get validated. And again, a lot of times I like having my stop a little bit above the low, just so that if price does run pretty aggressively, my stop gets triggered before other people, and I don't get a lot of slippage on my trade. It's just my way of doing it. I think it is pretty important to have a good deal of risk managed with a static stop, just because you don't know if when volatility is going to pick up. You don't know how crazy things will get when volatility does pick up, and it's just nice to have that static stop on board, to manage a portion of your risk in that environment. And it's one of those things where, if you have a significant percentage of your risk managed with that static stop, uh, mentally, once you get taken out on that percentage of risk on your position, it makes it much easier to manage the rest of the risk on your position dynamically. Maybe that's using closures or whatever other areas you're using to manage risk on a larger position. It makes it much easier because mentally you've already crossed the barrier of losing, right? You've taken a loss maybe it's not for the whole percentage of your trade, but it's for a decent percentage of the trade. And mentally, you've already crossed that barrier. It makes it much easier to operate within there. And again, it's one of those things that, shouldn't matter on paper, but when you get to the day-to-day execution of trading, it matters a lot, and it makes life a lot easier to, note those types of things, pay attention to them, and incorporate them in your system. For me personally, that helps me out a lot. For somebody else, it might be something different, but if you notice something that works like that for you, I would definitely write that down, put it in your journal, wherever you keep your notes, and make sure to incorporate that. Because, ultimately we can have great theories about the market and what the market does, but the money is really made in the execution. So anything that improves your ability to execute upon your edge and your ideas, that's a real gold mine right there, and you want to hold pretty tight onto that. But anyway, going back to this position, it's a 10 lot position. I think we can see it if we go down to the paper trading here. You can see some of my recent profits and loss here. And I think if we see, let's see if it shows up here. Okay, yeah, you can see it filled at 44,888, 10 lots. So a little bit higher than this, but basically the same area. Came down here, added 10 lots, which my larger position is 50 lots down there. Again, this position has creeped up a little bit as I take profits, and it's just the way it works. But initially it was from 3,888. It's crept a little bit up to 42. But again, it's a 50 lot position. I added 10 lots here, representing 20% risk of the larger position. I'm managing a little bit more than that. I'm managing 15, which represents 30% of now the 50 lot position. The idea being that, as price starts invalidating, I want to be pulling risk off. So that'll take 30% of the risk on my position off. But again, I'm pretty confident that, I can at least hit the first take profit on this trade, start securing account equity. I want to pull in, ideally with my trading strategy, I sort of incorporate, I build a lot of my trading strategy around hitting that first take profit and hitting that very quickly, and, hitting a level that offers a very quick and significant, not necessarily significant, but a quick reaction that allows you to at least start managing account equity very soon. And hopefully we'll see another push up into that level. But, remember, this was a 10 lot position here. So I've broken my take profits into 20% of that position. And I just put them at every observable level that I would typically trade. You see this level here, which would be, if it would come up here, that would fill a price extension. If it came up here, that would fill a point of release. If it came up here, that would fill a 618. Let's just draw the 618 just very quick. And again, 618 is not perfect. The golden pocket is actually, represented up into the 0.7, but it gives you a general frame to see that, okay, if price runs up here, up to these highs here, it's running up into the golden pocket. That might be a good level. And then I have the fourth take profit is up here. So just noting level by level, I just really, at the end of the day, you just trade price level by level. That's all it is. Nothing sexy, nothing special. This is really all trading is. But yeah, so I've broken it down into essentially 4 take profits. If price were to run up all the way to the high, that the 10 lot position, there would still be 2 on in case price broke and ran up through. And I always like to do that. I like to leave 20% on just in case, price really does start running. That way, I can participate in that move with the tail end of the position. Again, not demanding those crazy breakouts, but just leaving some risk on the table to participate. Of course, I do have a larger position on, so I don't need to do that to participate in the move. I could just participate with the larger position I have from lower, but just for the sake of explanation and the sake of illustrating my thought processes, I've done that here. just so you can kind of see what I'm thinking and how I actively manage this position. And yeah, there's really nothing more to that. It's a very simple trade that I've been layering onto my position, and very, very clear and simple invalidation level. Um, so yeah, uh, I have my profit target set, my invalidation set. Of course, I will manage this dynamically. It's a 15-minute chart. You can even go down to a 1 minute. Really, I know some people will say you can't trade the 1 minute on Bitcoin, but you really can. And as price runs up to these levels, you will see very low time frame swings between them, and those are all very tradable swings too. Um, even if you're trading micro lot orders between those levels, it's still price is price is price, so they're still tradable. And if I can capture some of those trades on a live stream video during the day tomorrow or later tonight, I'll make sure to do that. Just upload a video. So yeah, this will be the 16th update to my trading journal series. So if you guys like this type of content, just make sure to like the video, subscribe to the channel, um, you know, comment on the videos, and just keep an eye out for the next uploads. There'll be more macro analysis videos across different asset classes, and of course, more updates on the Bitcoin market and Bitcoin live trades, and some more psychology videos as well coming from some of the guys in our group. So just keep an eye out for that, and I'll catch you guys in the next video.